Wall Street is losing its mind over Trump's latest move to cap credit card interest rates, but the truth is more complicated. This graph shows the rising interest rate margin of the big banks. Think of credit card interest rates as having two parts. There's the base rate, which is mostly set by the government, and then there's the margin rate that's set by the credit card company on top of the base. The margin rate is their profit, and because banks have kept it so high, credit card users have had to hand over millions of dollars they otherwise could have saved or spent on things they actually need. Especially in the last 5 to 6 years, the banks have been experimenting with jacking up that rate over time, gouging consumers. But it wasn't always this way. Historically, credit card rates this high were illegal in many states. But a few things happened. First, the US allowed banks to set interest rates based on the law of whatever state they were based in. So banks, predictably, fled to low regulation states so they could charge whatever they wanted. Second, the banking industry consolidated. The whole sector is dominated by just a handful of major banks now, so they don't have to compete for your business anymore. Which is why you'll notice when you're shopping for a credit card that they no longer compete on rates, they compete on benefits. Miles, lounge access, cash back, all in place to distract you from what you're actually being charged. So with no meaningful competition or regulation, this lets banks jack up average credit card interest rates to between 21 and 24%. Just 10 years ago, it was closer to 12%. So a 10% cap on interest rates sounds like a nice win, right? Well, not really. Trump is only proposing this rate for 1 year as a temporary relief for Americans. But after 1 year, the banks can go right back to their predatory interest rate model. And worse, this 1-year relief is likely to attract more people to credit cards, where they will accrue debt and then get locked in when these interest rates snap back after 1 year. A real policy solution here would cap how much extra a bank can tack on, limiting the margin rate in this chart, stopping banks from gouging consumers while making sure that credit is still available. Nobody is exactly proposing that yet, but Senators Bernie Sanders and Josh Hawley have proposed the next best thing, a permanent 10% cap on credit card interest rates. But by taking their solution and limiting it to just 1 year, Trump isn't solving the problem, he's just neutering their bill, and even turning it into kind of a trap. And unfortunately, he's leaving the ability for the big banks to price gouge Americans in place. What we need right now isn't for the president to put debt on sale for a limited time. We need a permanent end to big bank loan sharking.